If you are with us for the very first time, if this is your first time clicking on the video, don't click away. If you have bought cryptocurrency, you've got to watch this video. That and more coming up next. Like and subscribe on your way in. I don't want to spend a lot of time on this video, but I thought I would just make this video and try to be as quick as possible. So today I came across this article on MarketWatch, and I figured I'd do a video on a theory or an idea for a video I've been thinking about for some time now, and I was a little hesitant to share it, but just because there's so much positive energy in crypto right now, but I thought I'm just going to share what I see. All right, so MarketWatch, it says here today, Dow loses grip on 30,000 early Monday as investors worry about coronavirus spread. Tesla sees first trade as S&P 500 member. So the US stock early Monday morning opened lower to start Christmas week as coronavirus stimulus deal overshadowed worries over a new COVID-19 strain in Europe. The Dow Jones Industrial Average was trading 200 points lower, and the S&P 500 or SPX retreated 1% to reach 3,673. The Nasdaq Composite Index lost 102 points, or 0.8% early Monday to reach 12,652. Congressional efforts toward a fresh aid package to combat the detrimental economic effects of the pandemic were coupled with a roughly $1.4 trillion annual fiscal spending package, with lawmakers set to vote on a bill later on Monday. So the question here is, I'm sure you clicked the video because you saw the thumbnail. Hey, you're wondering to yourself, how could all of this, what's happening now, affect the cryptocurrency market? How could fear around the coronavirus affect the cryptocurrency market? And I believe the best place to start would be back in February, right? All of this here this is the S&P 500 index. This right here is this move down is when COVID-19 hit, right? It started here. All of this happened right when COVID-19 was announced, that quarantine or lockdowns were announced. And guys, it only corrected 33%. That's officially a correction. It's not necessarily considered a crash, but it's 33%, right? 33%. Now, this entire move up while we were in quarantine, that was all stimulus. The government, federal government printed, or the Fed printed, the Federal Reserve printed, I think, $3.3 trillion in stimulus. This move right here is all stimulus. And why is it all stimulus? Because we're at all-time highs in unemployment. Okay, not all-time highs, but yeah, we're pretty since the Great Depression, right? 10 million people. Some people say 10 million people are without jobs. Some figures go as high as 30, right? Depending on what you're looking at. So right now there is this divergence that's going on between what's happening in reality. Businesses are closing, small businesses are closing, people are without jobs, right? All of this is happening, and while that's happening on Main Street, Wall Street is just having a field day, right? And a majority of this is happening because the tech giants are really holding everything up. Now, I want to show you something that I've been watching, and I've been really watching this. Okay, I've really been watching this. This is the RSI, and I just want to show you this massive divergence on the RSI. It's huge, right? Okay, so for those of you who don't know what divergence is, this is called the relative strength index, right? Or indicator, whatever. And it shows the volume in the market, right? So pretty much if there is true volume in the market, the RSI is going to keep trending higher. So if this was really true volume, like it's not oversold, if this wasn't a bubble, the RSI should be somewhere up here to match the price. However, we can see here the volume is actually lower than here. So this is the highest point in volume back in March when it sold off. Not here. It's actually lower here, but higher here. You call that divergence. Whenever we get divergence on the RSI, and I don't use the RSI to make decisions on trades, whether we're overbought or oversold. You can get a lot of false readings, but that's besides the point. Once you see divergence on the RSI, every time I've seen the divergence, you usually get a massive sell if you get divergence at the top of the market. All right. I saw something similar to this on the DXY last year in 2019. And let me show you guys. Oh, here we go. I was tracking this 2019. Look at this nonsense right here. Right? I'm sorry, not here. This was since last year. Let me show it to you. Where are you? All right. Notice here, we're that much lower, right? But check this out. Look at that. The RSI should have been higher. It actually ended up either being equal or lower. And look at the dollar right now. That's the value of the dollar, everybody. It's literally going down. So we're literally seeing the same thing here on the S&P. The S&P is gonna tank eventually. All right. We got divergence. How could that potentially affect the cryptocurrency market? Well, I am glad you asked that. I would like to remove this. Let me remove it. I don't want to remove. Oh, come on. Oh, there we go. All right. How could that affect the cryptocurrency market? If we want to know how it did, let's remember here during the start of the COVID was 32%. Okay, if we take the wick, all right, 35%. Let's check Bitcoin. How did Bitcoin operate late February to March? So we're looking at late February, right? Down here to March. Look at this. Bitcoin, if we take the wick in as we did with S&P, Bitcoin fell 62%. All right. Let's go over to XRP. XRP, late February 17th, down to 14 cents. I remember it went down to 14 cents, 64%. Guys, are you guys catching the pattern here? All right, let's go over to February 17th. Let's do the 17th all the way down. Let's take the wick in. If we don't want to take the wick, guys, 56% on ETH. What I'm trying to show is that fear in the stock market here. This is what we do know. Regardless of whatever people are saying, whatever people want to say, or whatever you want to see, people want to say on the internet about fear is stupid with cryptocurrencies. Guys, I'm not saying they're not telling the truth. That's not what I'm here to do. All I'm here to do is show you what's on the charts. This is what we do know. When there was fear around the spread of COVID in the stock market and it sold off, the same thing happened in Ripple. The same thing happened in Bitcoin. The same thing happened in ETH. I can even go to Chainlink. Same thing happened with Chainlink. Okay. February 17th, around there, we can see Chainlink fell 69%. Okay, on COVID fears. So if this mutated COVID virus makes landfall, or it's reported that it's on US soil, guys, what we see happened earlier this year could very well happen again. And this is why I have been saying on my previous videos about Bitcoin, I really think this pricing is artificial. Because the one thing we do need to take in consideration, guys, behind these candlesticks is human psychology, human behavior, period, right? There's a reason why billionaires or whales that invest in these markets are called the smart money, right? They're called the smart money. Now, someone who is a whale that we saw back when everyone was fearful of a market crash back in March said, let me buy Bitcoin at 5,000, right? Literally made 300% on their investment. Now, if COVID-19 spread, a second wave, a true wave comes again, and apparently this mutated virus is 70% more contagious, guys, what do you think people are going to do? They're going to start taking profit, to take some profits out of the market. Why would you, if you're an investor, just unbiasedly, without any emotions, see what happened the last time? Why would you keep your money in the investment? Like, no one is thinking, not a lot of people are thinking along these lines, right? So what I'm saying, and the only investment, guys, that did okay, that kind of rebounded before the rest of the market was gold, right? And let me even show you. February 17th, where's that? Okay, February 17th, gold was still up. All right, it fell, and gold, even if you want to take that into consideration, gold only fell 12%. All right, the stocks fell 30. Bitcoin fell, what was that, 50 something percent? Bitcoin fell 56%. Link fell 60%. XRP fell, what was that, 60%. You know, the only asset that held value during the time when everyone was fearful in the market? Gold. So this is my thing against a lot of people who are saying that Bitcoin is a store of value. How can a store of value in a time of fear lose 56% of its value, when the traditional store of value, the traditional safe haven, only lost 12%, and almost every other asset is oil. Let me not even start with oil. Oil went down to almost zero, okay, as a commodity. I remember I made some money on the oil. I made money on oil shorts during that time. So let's not be blind in the crypto market. I'm seeing some videos titled "Fear is Stupid" for cryptos. Come on, we have to take it into consideration, and this is why I've been saying, and even my previous analysis. Look, guys, that's those spinning tops. It's rolling over, touching that 50 EMA. We could get a bounce back up, make a new lower high, and we'll see what happens. If it breaks the trend line, we could go to 79 to 80. If not, I think we're going to keep rolling over. But that's just my quick analysis on XRP. This is where we are. And I just wanted to show this very quickly to you, that we cannot be myopic in our view on crypto. And a matter of fact, I'm here on the S&P 500. I'm lining up some shorts here. I do think we could push a little bit higher, probably do some wick fishing around these highs again. And I think either on the stimulus plan. Anyway, I'm not here to analyze S&P 500. But this is what we do know. When there was a lot of fear in stocks and in other markets, it also affected cryptos. So that's my theory. This is just my opinion. If you like it and you found some value in this one, you press that like button. If you like the analysis, if you found some value from this video, why don't you subscribe? After that, guys, catch y'all in the next one.